This is Talking Michigan Transportation. I'm Jeff Cranston. In January 2020, before we were all seized by a pandemic, the Michigan Transportation Commission, at the request of Governor Gretchen Whitmer, authorized the sale of $3.5 billion in bonds to stave off the rapid deterioration of our state's most vital roads and bridges and launch a Rebuilding Michigan plan. Decades of underinvestment has left us with crumbling pavement, bridges held up by temporary supports, and other failing assets. A year and a half after the authorization of those bonds, two people are here to tell us about the progress. First, Patrick McCarthy, Director of MDOT's Bureau of Finance, will talk about the coming sale of another $800 million in bonds. Then, Brad Wieferich, Director of MDOT's Bureau of Development, will talk about how industry has responded to the governor's plan and what else we can expect. Patrick McCarthy is the Director of the Bureau of Finance at MDOT and has been deeply involved in these various bond sales over the years, and also in refunding or refinancing these bonds so that we can save the taxpayers money on interest rates. So Patrick, thanks for taking time to do this.
Thanks for having me, Jeff.
So first, let's talk about the next round of bonds in the governor's Rebuilding Michigan plan. Market had a very good reception to that first sale. Some of that money is still being put out there as our projects are spread out over a number of years. What are you feeling now about going back to the market a second time?
Sure. As we know, the governor authorized and the State Transportation Commission authorized us to issue $3.5 billion of bonds over the next 4 years. In August of 2020, we went to the market with the first round, or tranche, they call them, of bonds for $800 million of principal out of that $3.5 billion. That issuance was well received by the market. It was oversubscribed, which means we had more orders than we had bonds available for people to purchase. That allowed us to begin the projects. We started and completed the first project on I-496 last fall. And now we are ready and planning this August to go to the market for the second tranche of bonds for another $800 million of bond proceeds or principal issuance to support the ongoing list of projects that were originally announced. There were 46 projects, again, for that $3.5 billion. The market
talk
conditions.
A little bit about why 800 million.
That's just as we're delivering these 46 projects, we are keeping an eye on the cash flow needs of the projects, both the ongoing projects that we have and the projects that are being let and awarded this summer. Many of these projects are multi-year projects. So even though we're issuing or letting projects for more than the $800 million, we expect those projects to take multiple years to complete. So between the timing of the projects that we let in fiscal year 20 and this year in 21, these cash proceeds from the bond issuance will be used to satisfy the payments to the contractors and the consultants on those projects.
To get to 3.5 billion, there's going to have to be some more issuances. Do you expect them to be in similar amounts, understanding that 800 million doesn't go into 3.5 billion in an even number?
Right. It'll be similar amounts probably. It'll again depend on how the cash flow, how the projects are progressing and the spending patterns of those projects. Most likely it's going to be I think it's probably $800-900 million in fiscal year 22, and then the final issuance in fiscal year 23 will be dependent on how the project lettings come in, how the schedule of the expenditures is progressing. If the lettings come in under budget, then we won't need to issue the entire $3.5 billion that we've been authorized. We're only going to issue enough to cover the expenditures on these projects. And hopefully these lettings come in in a positive environment, and we're able to deliver these 46 projects for a reduced cost.
Well, so far we've done pretty well in terms of the bids, and I'm going to talk later to Brad about that. But when you talked about being oversubscribed, so basically an 800 million sale, getting us more than a billion, how does that work exactly?
Sure. So our $800 million of principal that we issued brought in a little under $1.1 billion. And the difference there is the premium that was recognized on the bonds. The bonds to the investor are attractive at the interest rates that we're offering them, so that they are willing to pay a premium, an additional amount of money on top of the coupon rate of the bonds, in order to receive that bond and hold that bond for anywhere from a few years to 25 years, depending on which series of the bonds that they bid on, that they put in their offer for. So it's the attractiveness, which results from MDOT's stability as an investment, as well as our ongoing management of our existing debt service. We're a low risk for them, and they're willing to pay that premium to invest in the bonds that we're offering.
Well, so that kind of further solidifies, the argument on the side of bonding, and I guess the difference between, good debt and bad debt. And I know that, debt conjures negative thoughts for most people. Nobody thinks debt is a good thing, but there are times, obviously, that our economy and economies around the world depend on certain levels of debt and debt being managed properly. And that really speaks to the whole decision about this plan, and, the investment of putting the money up now to keep the system from falling into further disrepair and basically disintegrating before our eyes, and what that cost would leave to our children and grandchildren versus the cost of the debt, right?
Exactly. We are at almost historic lows of interest rates that the market is paying right now for debt. It was historically low before COVID. COVID bumped it up just a little bit, but it's still at almost historic lows compared to 5 and 10 and 20 years ago. It's the ideal time to be going to the market as far as the debt service that the department is going to incur. And then to your point, the savings that we can recognize from the fact that we no longer continue to have to put maintenance dollars into these roadways once they've been fully reconstructed, the delays for the motoring public that they will see during the construction of these 46 projects, but they won't see it every 2 to 3 to 5 years over the next 20 years as we're out there doing patching and repair work on those roadways. So all of those are considerations that we take into account when deciding that issuing debt is an important tool for us to deliver the road program and try to keep the motoring public moving along with as minimal impact as possible and as fiscally responsible as we can.
Yeah, that's a really good point. This is a good opportunity to remind people that MDOT and I think a lot of DOTs have a formula of user delay costs, and it isn't just the money that goes into the project and what that costs us as taxpayers, but when the road is closed or there's work being done and you're slowed down, that's costing you in terms of your time. And as somebody who's living in a just-in-time delivery world and in commercial markets, it's costing them money too. So everything we can do to speed these things up saves us all. Talk a little bit about the non-rebuilding Michigan bonds that were refunded, and that brought in a pretty hefty savings too.
Sure. And at the same time that we're going to go to the market in August for the $800 million of rebuilding Michigan bonds, we're also going to refinance the 2011 state trunkline fund bonds, which after 10 years of being out in the market are callable. We can ask for them back and replace them with bonds that we will issue at a cheaper rate. So we're going to issue a reduced number of bonds that would be outstanding. We're going to replace, I think it's $68 million of trunkline bonds at a lower interest rate and save a little under $19.6 million on that debt service on that $60 million of debt. So, we're being good stewards and managing the outstanding debt that we have and looking for opportunities throughout the life of these bonds that we've issued to save money for the taxpayers, and then we can reinvest those dollars into our existing road program.
So it sounds like you're constantly monitoring these things, right? And your staff is paying attention and looking for the right place to maybe jump in and do a refunding like that.
Yes, that's something that we continually keep an eye on. When we issue bonds, there's usually restrictions on how frequently or how long you need to wait before you could do a refunding. But as everybody probably knows, when you're looking at your savings account, what you're earning on your savings account over the last 5 to 10 years continues to decline. That's bad for your savings account, but it's great if you're in the market to be refunding your existing debt and saving that money when you're paying that interest rate out to somebody else.
Yeah, that's a good analogy. Well, thank you, Patrick, for taking time to explain this again. And good luck with the next round of bond sales, and I'm sure we'll talk about it more.
Thanks, Jeff. We're actively working on it, and we can't wait for this August deal to be finalized and priced.
Spoken like an accountant. Hi, for the second segment, I'm with Brad Wieferich, who is the director of the Bureau of Development at MDOT, which is where most of these road projects originate in terms of design and a look at all the things that are going to go into them. Brad, thanks for taking time to be here again.
No, appreciate talking with you, Jeff.
So talk a little bit about rebuilding Michigan and how things have gone now that we're, I guess a year into it. The commission authorized the bonds in January of 2020. We didn't actually sell the first tranche of bonds, as Patrick likes to put it, until August of 2020, but some of that money was to backfill work that was already being done on 496 west of Lansing, which was the first project completed under Rebuilding Michigan. But what are you seeing in these projects, and how bids are going, and how industry is receiving the whole plan?
From where I sit, Jeff, things are going very well. I'll be honest, increasing our program to the size that this program did. I think I personally had some concerns about our resources, our availability to deliver, but we've been doing it. And we have about $1 billion worth of work that includes Rebuilding Michigan money in them, contracted out right now. So the overall program is about $3.5 billion. We're maybe about a little less than a quarter of the way into it from a dollar perspective. But what we are seeing is that both the delivery of these projects and in the bidding that the department and industry are responding. Right now, overall, looking at the combined engineers' estimates versus the low bids that we're seeing, overall, we're about 2% under our engineers' estimates. So things, all in all, are going quite well.
So that's a good sign. That means that there's competition in the industry for the most part, and they're bidding competitively to try to get these jobs, and that's why they're coming in where they are, right?
Yeah, that's exactly right. That's exactly right. I mean, we develop our estimates based on the work in the contract, obviously. How much concrete, how much asphalt, how much earthwork, how much bridge work. We have to take all of these things into account. And we look back at our historical prices on what we get for different projects in different regions and locations, and try to come up with what we think is a really good estimate for that project. Those estimates help us plan out the dollars, obviously, try to kind of make sure that we're managing that resource appropriately. But at the end of the day, these go out to the private industry for competitive bidding. And it's actually really good to see that our engineers' estimates are very close in line with those low bids. Therefore, it kind of validates, in my opinion, what our engineers are doing on the front end. And at the end of the day, like I said, we're about 2% under where we thought we would be. So pretty good shape.
So in your best non-engineer ease, can you talk about that process and what really goes into it from the conception of a project until it's bid, and how the process of estimating, and I guess also the process of design, because I suspect a lot of people hear design when you're rebuilding a freeway that already exists in the same footprint in the same corridor and think, well, how much could there be to design it? It's a road that already has straight segments and curves and all those things built in. So talk about all of that.
Sure. And with my road design background, and when I told people when I used to be an engineer, that was really my passion. So I could talk for a long time about it, but I won't. I'll try to make it as succinct as possible. A program like this was interesting, actually, because the concepts were developed a couple different ways. One, we had, for lack of a better term, I'll call it wish lists of work, big projects that we knew we wanted to do, but we simply didn't have the resources, simply didn't have the funding to do. So that put those on the table. In addition, we have our 5-year transportation program that includes 5 years worth of projects that we're planning. We looked through that list as well for projects that we could accelerate. Let's go ahead and move those up and deliver them to the public earlier. And with those jobs specifically, the ones that we moved up, we also looked at the scope of work. What are we really doing? And one of the terms that I've heard in the past is that, with rebuilding Michigan, we're going to build them right. One thing that I would like to try to clarify is that I don't think that we were building them wrong before. What we were saying by building it right is building it for the long haul, for a long term. The projects that we have been putting out for the last several years, we follow an asset management approach, which means we want to do the right fix at the right time to really maximize our resources. But with limited resources, you can't do a lot of these long-term fixes that really give you a big boost to your overall system condition. So if a project was to be delivered, 4 years from now, but it was an overlay, an asphalt overlay, just a cap, maybe we want to take that, move it up, but it really needs to be a reconstruct. We need to get this thing into a 20 and 30 year lifetime rather than just something that's 5 or 10 years to kick it down the road. So once we've kind of settled on this is the type of work that we want to do, we call it the scope of work. We've settled on our scope. Now we have to take a look at the amount of work that this involves. How many tons of asphalt, how many yards of earthwork, how many tons of aggregate, how many cubic yards of concrete pavement, how much bridge work is going to be involved, the steel and the concrete and everything that goes along with that. So we come up with our schedule of items, our basically the schedule of the materials. We know how much we're going to be putting into the project. We know historically, because we keep track in our databases of our past prices, we can take a look at where those trends are heading for different geographic areas of the state, the different materials. But that's really how we end up then with an engineer's estimate. There's a lot of nuances that go into that and will affect the overall bids. Constructability is one. How efficient is it? Obviously, building a roadway, very low volume, very rural, is very different from a per mile standpoint than building a very urban, very complex, trying to shift traffic around. So there are many, many factors that go into it, but essentially we start with the materials and quantities based on average prices, and then we have to adjust for these project-specific type issues. And like I said before, I'm very pleased that the estimates that we have come up with, there's been a couple of outliers in the list, but overall, we're 2% under our engineer's estimate. And that's pretty sharp pencil from an estimating standpoint.
So that's good. And I think you hit on another point, something that Patrick and I have talked about, and that's the good debt that really is bonding, and how going into debt in this case by selling these bonds actually saves you money in the long term, because if you're back out there, every 3 to 5 years resurfacing a road, spending money on it, throwing good money after bad, as they say, it's going to cost more in the long run to maintain it that way than to finally be able to rebuild it and get that longer life. I think maybe it's like the difference between renting your home and buying your home and how far your money goes. So I think you made a good case for why we need to do that. And there's also a user delay cost factor involved that, isn't even something that's really measured in terms of, what the taxpayers put into these projects, but what affects all of us in our commutes and our time, getting various places and taking kids to games, and not to mention commercial carriers and just-in-time delivery and how it affects those schedules.
Yeah, you're exactly right. And like I mentioned before, over the past, I don't know, 10 years, we'll say, we're doing everything we can to stretch a dollar and to keep the conditions, the surface conditions safe and passable for the motorists. But a program like this does allow us to do those long-term fixes and not only address the pavement for a long term, but also get to some of the infrastructure that's underneath the pavement. Typically, when we do these short-term fixes, and when I say short-term, 10, 12 years type of thing, we're not looking to go too deep. We're trying to get the surface in good shape. We're trying to get the water to drain where it needs to go to. We'll certainly address any safety issues that we can within the scope of work. But that long-term fix does allow us to really put that funding out even further into the future when we'll need it, on top of the impacts to motorists that you mentioned.
Beyond that, and what you're seeing, I think you hit on something else, and that's about fixing them right. Governor Whitmer, when she ran in 2018, she talked about fixing them right the first time, and I think there were people that reacted defensively to that, just as you mentioned, because it sounded like somebody wasn't fixing them right in the first place. But what that really means is, if we have the resources, then we'll rebuild them instead of resurfacing them, and that's what Rebuilding Michigan is allowing us to do. It's heading off the ultimate deterioration of the overall system. It's really just a dent. In the end, we're still going to need a long-term sustainable funding solution, and we're going to need, a lot more money than what was put in here. But in terms of shoring up probably our most vital freeways, the most important to commuting into commercial corridors, it's going to make a big difference. And I think it's a good thing that you're seeing good numbers so far.
Yeah, it's when I'm trying to explain some of the things that we do from an asset approach, I think about a roof, the roof on my house. I can put a layer of shingles over the shingles once. I can tar it many times, but if I keep tarring it and I keep fixing it, that's all I'm going to be doing. I'm going to continue to tar it and patch it and fix it. This is allowing us in many cases to get the new roof that's going to provide that longevity that we need.
Well, thanks, Brad. I look forward to talking to you again over the next several months to see how we do when another $800 million in bonds go out there on the market. And we've still got quite a ways to go with Rebuilding Michigan. So thanks for taking time to explain this.
Anytime, Jeff. Appreciate it.
Thank you again for listening to this week's edition of the Talking Michigan Transportation Podcast. I would like to thank Randy Dubler and Corey Peaty for engineering this week's podcast. To subscribe to show notes and more, go to Apple Podcasts and search for Talking Michigan Transportation.